Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame bullish scenario where we still expect a continuation to the upside in either a wave 3 or a wave C after wave A or 1 is finished and now working on wave 2 or wave B. The most common target for wave C is between the 1 and the 1.236, pulled from the low to the high of A to the potential low of B that I now put around the 382, which makes these fibs sitting between 35.5k and 37k, with the 1.618 being a minimum target for a wave 3 pulled in the same way, where the 1.618 is sitting at 39.5k. A wave C tends to be more lazy. It's still an impulse but takes a bit more time, while a wave 3 should be very impulsive and parabolic towards the upside with a lot of volume as well. If we look at this wave 2 or wave B, we were looking for a move towards the downside, as the 236 is a very rare target for both a wave 2 and a wave B, pulled from the low to the high of A or wave 1. Most common targets for a wave 2 is between the 0.5 and the 0.786, which is between 28.2k and 26.2k. And for a wave B, the most common targets are the 382 to the 886. So the 236 is very rare for 2 and also very rare for a wave B. Hence we were looking preferably for a bit more downside still. What's nice is that around the 382 we also have some extra confluence in this blue support area over here between 28.8k and 29.1k, and the 0.5 has some extra confluence between 27.8k and 28.2k for then potentially an interesting scenario towards the upside for longs. Of course, wait and see how price is going to react over here, and if all your entry requirements are being hit, that is the moment to take action and look for a potential long towards the upside. In the bearish scenario, we're still looking for continuation to the downside, where the most common target for wave Y is between the 1 and the 1.236, taken from the high to the low to the high of this wave X over here. And what you can see is that this target area for a wave Y is in confluence with what price has already done over here. So yeah, you have a point of control of this range, of course, that is in confluence with the target area. But what I don't really like is that the target area for wave Y is at the same level as where price has already ranged once before. So what is the probability of price then bouncing here for a big continuation to the upside? Also, in a wave Y, a zigzag, flat and triangle are the most common patterns. Now, a zigzag is a 5-3-5, and yeah, based on this range, that's very unlikely. A flat is a potential in a 3-3 and then a 5, but you can see this wave C has to be very, very long compared to the wave A and the wave B to get a wave C all the way down here. It is possible, but it at least at the moment doesn't yet look that likely. But a flat for me is the only potential wave Y scenario, as also a triangle doesn't really work for me. If we then go to the low time frame scenario and we zoom in to the 4 hour, then we could be looking for that flat scenario as just mentioned. But also here you can see that even the rare target for wave C, being the 2.618, is still far away from the target of a wave Y over here. If we look at this scenario, we then have 3 waves in A, 3 waves in B, and then a move to the downside in a wave C. The reason I put this move wave A over here on this pivot and not that one has to do with the wave B high. So these fibs are now pulled from this high to this low, and wave B, the high, hit the 1.236 perfectly for then a wave C potential to the downside, which has to be an impulsive structure. But if I pull this pivot from the high to this low over here, then you can see that wave B did not hit the 1.236, and I don't like that, because the most common target area for wave B is between the 1.236 and the 1.38. So this is important to me, so that's why I have this as an A, this as a B, and that's important for the target of C as well, because one of the 1.618s is pulled from the high to the low of A to then the high of wave B. The other 1.618 is pulled from the low of A to the high of B. So the pivot that you choose for A definitely has influence on where C might then end. Now the 1.618s are in between 29.1k and 28.4k, with the rare target, the 2.618, sitting between 27.3k. And also here, the wave C is in confluence with that target box around 29k, and between the rare and the common target you have the target box of around 28k. So that is very interesting confluence indeed. If we look at the low time frame bullish scenario, then in this scenario we are willing or wanting to see upside, right? So we then have a corrective structure that is finished, and then we are looking for this to be a 5-wave move to the upside, this being a wave 2, and now you want to see an impulsive structure to the upside. Couple of reasons why this is not looking great is, first of all, this is an expanding diagonal in a wave 1, not really something that you like to see if you talk about diagonals, because preferably you see a contracting diagonal. Also, wave 4 has to be a zigzag, but it's a bit questionable because over here, this wave C and then an ABC. This wave C did not take the low of wave A, which is not what you want to see in a zigzag. And also, this wave 2 now bounced on the 886, taken from the low to the high of wave 1, which is a rare target for a wave 2 and not a common target for a wave 2. So those are a couple of things to at least keep in mind. As it stands, this can still be a zigzag in a 535 because price hit the 1.618 trend-based fib extension taken from the high to the low of A to the high of B, which is a rare target for a wave C, but as we know, it is a common target for a potential wave 3, 4, and then a wave 5. If we then look into the micro scenarios, then we were looking for price to move to the downside towards this blue target box over here. And in Discord, what Munino did very nicely is actually post my idea in the group here, where I was looking for a move to the downside to hit the blue target box, then a move up and a move to the downside. And this actually hasn't changed with the bearish scenario, but on the bullish scenario, you don't want to see that move down. You want to see the continuation up. Because in the bullish scenario, this has to be the low of the two that I just mentioned on the low time frame. And on the micro, this then has to be a diagonal wave 1. Then you're looking for a wave 2 for then continuation to the upside in a wave 3. Price now bounced on the golden pocket Fibonacci as well, which is the most common target out of the common targets for wave 2. The golden pocket is the most common, so that is quite nice. And then you want to see continuation. Of course, in this scenario, price can still come down again, but it is not allowed to take this low. You want to see a wave 3 to the upside, where this resistance, it used to be support, but is now acting as resistance because it broke. You want to see this being breached, right? It should be nothing. For a potential wave 3, a wave 3 should be able to push through this without any problems, because the target for a wave 3 as it stands at the moment, taken from the low to the high of 1 to then the low of the wave 2 we have at the moment, a minimum target for wave 3 is the 1.618, right? Which is of course far above this white target box. And then you'll be looking for this resistance area that we now have over here between 31.1k and 31.2k as a bare minimum. In the micro bearish scenario, it's the drawing that I showed just now on Discord, where they're looking for this to be a wave 4, so a corrective, a sideways structure. And again, if this is a leading diagonal, so a 5-wave move to the upside, you don't want to see this low taken, but what you do want to see is this high being taken, because a 5-wave structure to the upside can never stand alone. It always needs another 5-wave move as a companion basically, and then a wave C and an A, B, C before then continuation to the downside. Now it's a little bit like, it's not the cleanest diagonal, but there is potential for this move to be a diagonal, so a potential 535 on the cards for then a continuation to the downside. Currently, wave 4 is almost twice as long in time compared to wave 2, something to keep in mind as well. Still no problem, as a wave 4 can be much longer than a wave 2 in general, so another move to the upside and then down is absolutely fine, but we wait and see if this support is going to hold for price. If you go to the CVD Divergences, what is interesting is that very, very locally on the 5-minute, we do have bearish CVD Divergences pushing price towards the downside. We do have the bullish ones over here, but we also have bearish ones, bigger ones, with the range, lower highs on price, higher highs on the CVD. And that is definitely one to keep in mind because of this bearish high volume move towards the downside. If I don't go to AGGR, you can see over here the bearish CVD. Lower highs on price, higher high on the blue CVD. Bearish CVD divergences locally, pushing price towards the downside, back towards this support area over here. And the question is it going to hold or not? Then yeah, if it's not going to hold, we could take a low potentially, but preferably, of course, it's going to hold and then move towards the upside. It depends what we want to see. And then again, for a potential long scenario over here, you want to see if all your entry requirements are hit. And if that is the case, it could be interesting. But if you don't have a plan or strategy and you don't have entry requirements, then, you know, one cannot really recommend it, because you need a plan and strategy, preferably based on statistics. So let's wait and see what's going to happen here more locally. And then if we look at the probabilities, what I would prefer on the medium time frame is the bullish scenario, where we are going to move towards the downside. Look at that 382 level, 29k, or potentially deeper for 28k, 29 or 28 over here, for then a continuation to the upside. On the low time frame, my preferred scenario at the moment is bearish, looking for a C towards the downside, towards again 29k or 28k. And on the micro scenario, I would prefer to, as basically the drawing has shown, to bounce on this target box, move to the upside to continue ranging for a wave 4, and then eventually move down. So then the white target area over here is going to be resistance now. Find resistance for then a move to the downside. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.